Meeting of the Town Pension Board and Police Pension Board is called to order on Tuesday, October 15th, starting at 4 p.m.
All right. Thank you very much.
We'll turn it over to our investment managers for their quarterly report.
All right. Thank you, Paul. Nice to see you all. Good to be here in person. Quick reminder, Connor Watson, member of the Public and Taft-Hartley Fund team at Boston Partners. Been there for about 18 months now. Prior to that, I was with BNY Mellon for 10 years, the Boston Company, and State Street before then. Joined by a familiar face, John Forelli here. He's our head of portfolio research, 14-year veteran of Boston Partners. Prior to that, he spent 12 years as a portfolio manager and also had investment analyst responsibilities over healthcare, chemicals, and industrials. Just planning on just providing a quick update on the firm before getting it over to John, who can touch on performance, current portfolio makeup, and a little bit about what we're seeing out there in the world. Does that work for everyone? Yep. All right, perfect. Page 4, you can see Boston Partners as of the end of the third quarter. As you know, Boston Partners is a value-focused equity manager. We were founded back in 1995. The majority of our 175 employees are just up the road in Boston, where John and I drove down from. Assets as of the end of the quarter were $107 billion. That's up from the last time we met with you when we were at about $100 billion as of the end of the second quarter. We benefited from some nice market movement, but we've also actually seen a lot of interest in Boston Partners. We've had some very good inflows, and that's really been across the spectrum, across the domestic space, global, international. People seem to be really interested in what we're doing, and our investment style is just resonating with a lot of folks right now. Our group in particular just onboarded about $1 billion in new assets in September. So good time for the firm. Everything's very healthy there. You can see a breakdown of that $107 billion in the bottom right. Your premium equity strategy, which is what you use as the equity portion of your balanced account, sat at $11.3 billion as of the end of the quarter. A key part about Boston Partners is that all of our Boston Partners strategies use a single investment philosophy and approach. We've had a lot of success doing that over the years, and sort of as a proof statement to that, you can see on the next page some information that we've shown you before, but this is kind of a new graphic, a new way of looking at it. This is since inception annualized net of fee outperformance versus the benchmark. So each green bar there is showing how much we've been able to beat the benchmark net of fees going back to inception. You can see your premium equity strategy, which is the equity portion, that third one down. We've been averaging 2.6% outperformance over the benchmark going back to 1995. And I know that's what you hire an active manager to do, to beat their benchmark, but not all of our competitors are necessarily able to do that. So we're very proud to be able to provide that service to you all. Next page, page 6, quick look at the service team. You'll see my face there on the bottom right, as well as Doug Rossi. He's the dedicated client service analyst for this relationship. Works closely with Karen and Jen on reporting, raising of cash. Between the two of us, we just make sure that you have everything that you could need. You deserve a high quality of client service, and that's what we're here to provide. Next page, this is just representative clients, the growing list. We, as always, appreciate you allowing us to use Town and Darien out there when we're meeting with your peers. A lot of folks like to know the company they keep, so appreciate the continued partnership on that front. Finally, page 8, this is our investment team. No major changes to report here. On the left-hand side, you'll see our portfolio management and portfolio research. John Forelli there in the middle of the second column, and also Julio Romalo, who's the portfolio manager on your premium equity strategy. The middle group here are our investment analysts, both fundamental and quantitative. These are really the boots on the ground. They're digging into the holdings that are in the portfolios. This is a group that is very experienced, 17 years of industry experience on average. They're meeting formally with our portfolio managers and research twice a week. That's on Tuesdays and Fridays. They're checking in and having discussions over the names held in the portfolios, as well as pitching new ideas to make sure that the best ideas are getting into the portfolio and available to benefit investors like yourself. One quick note, we did add an investment analyst in this past quarter, Vern Garin. Vern joins us from Wolf Research, and he was a graduate of Carnegie Mellon. Not Carnegie, as some people from Pittsburgh like to always shove down my throat. But Vern is a junior analyst. He's actually similar to Meg Zona, who we talked about last quarter, where it's a young analyst that we're bringing in, pairing with an experienced and seasoned investor, in this case, Eddie Stansky, so that they can learn the Boston Partners way of investing. We like to sometimes maybe call it indoctrinate them, but make sure that we have that deep bench, lots of resources, and that they really buy into how we see the world. So a good ad there in Vern, and we hope to see good things from him. Pause there, see if there's any questions on the firm or on the team. If not, I'll hand it over to John.
Thanks, Connor. Move ahead to page 10. This is the math part of the exam here. It's a page of numbers just to show your performance third quarter 2024. Your overall fund was up about 6.2% net of fees. That lagged a little bit behind that, about 100 basis points behind your primary benchmark. We did manage to outperform the benchmark if you compare us to the S&P 500 as our equity alternative. When you go down the equity line, you can see our equity performance was a strong about 7% last quarter, but it did lag behind the Russell 3000 value return, but did manage to beat the S&P 500. And the fixed income, as a reminder, those are ETFs, basically indexed funds, and they have kept pace with the benchmark they're supposed to keep up with. And then in addition to that, we are overweight equities relative to fixed income in your portfolio, so our asset allocation added value to your portfolio because equities outperformed fixed income for the quarter. And then you can see the year-to-date numbers since inception numbers, and since inception, again, this portfolio has returned a very strong 7.76% compared to the benchmark of about 6%, so we've outperformed that benchmark by about 1.8%. Since inception, which is now over 15 years. In fact, it's almost 20 years. We're at 19 years now together as a partnership here. So we certainly appreciate your business over that time. The first page we saw is the town's pension fund. The police, you can see on page 11, virtually identical returns, and then you can also see the OPEB returns on page 12. The only difference between these returns is at the inception date of the strategies. On page 13, we can see the dollar assets that you have entrusted with us since inception. So you can see the employees have about $118 million in the fund. It's interesting to note also the police have about $65 million in the fund. Invested money at the same time, but the police has had to take money out to pay benefits. In fact, the net investment with the police is actually, they've taken out a little bit more than they originally put in, but they still have $65 million, which is quite a feat. And then the employees of the town invested about $22 million with this on a net of fee basis, and now have $118 million. So just to see how those assets can grow over time. And if you add all of these assets up together on this page, you initially invested about $57 million with us. You've taken out about $28 million. So that's about a net investment of about $30 million. And that $30 million is now $196 million collectively for all of the accounts. So you've made about 5.6 times your initial investment over that time period, of that nearly 20-year time period. Page 14 just shows you the asset allocation in the account. As a reminder, your normal asset allocation would be 50% equity and 50% fixed income. And today we're at about 55% equity and 45% fixed income in your account. And that's because we're finding the equity market a little bit more attractive than the fixed income market. 10-year bond yields are hovering around 4%, not quite attractive enough relative to the equity returns that we expect to see over the long term to have us have a more of a balanced approach there. Okay, page 15 just gives you just a quick reminder of how we manage money for you on the equity side. We're creating portfolios that really are biased towards three characteristics: low valuation, low PE ratios. Companies that are lower valuation have historically outperformed companies that have higher valuation. We try not to overpay for the houses that we live in or the cars that we drive, and we try not to overpay for the equities in your portfolio. At the same time, we're trying to find quality assets, so we're not trying to live in fixer-uppers or drive around jalopies. We want to find good quality assets for your portfolio, and your portfolio's very high operating returns on assets and returns on equity relative to the benchmark. And then finally, if we can find those inexpensive, high-quality companies with one last attribute that we call improving business momentum, we want to invest in companies that are meeting or exceeding our expectations as investors. We have expectations for how much revenue, earnings, and cash flows your portfolio company should be making, and if they fall short of those expectations, that would give us an incentive to potentially sell that stock out of your portfolio. On page 16, you can see those characteristics relative to the Russell 3000 benchmark as well as the S&P 500. And you can see in the valuation circle PE FY1, that's your PE, the PE ratio of your portfolio on expected 2025 earnings. So we're looking at to next year. Portfolio trades at less than 14 times earnings compared to 16 times for the benchmark, with a much higher free cash flow yield. That's really very important to us, is find these cash generative companies. At the same time, we're not sacrificing quality. The quality of your portfolio from a returns on equity, returns on assets basis is higher than that of the benchmarks. So again, very high quality portfolio. And during the second quarter, 88% of your holdings met or exceeded our earnings expectations, compared to 84% the previous quarter, 72% the quarter before that. So we're seeing improved business momentum as we've gone through this year in your portfolio. It's something that we want to see in the portfolio. Hi, Kelly. How you doing?
I'm good. Sorry for being late.
No problem. We're just turning to page 17. This will just show you the portfolio that we manage for you is an all-cap portfolio. So we will invest in both large cap, mid cap, and small cap stocks in your portfolio. And you can see relative to history, we're maybe a little bit underweight that top line, which would be large cap. We have about 55% of your holdings in large cap companies today. We're overweight the green line, which would be the mid cap portion of your portfolio. We have about 45% of your portfolio in mid cap stocks. And then we have about 10% of the portfolio in small cap stocks. So overall, again, biased a little bit more towards the mid cap portion. The larger stocks tend to be a little bit more expensive on a relative basis. On page 18, you can see how the portfolio is currently positioned. On the equity side, the top 10 positions make up about 21% of the portfolio, with Alphabet being the biggest position at 2.5%. We currently have 113 holdings in your portfolio. We'll typically have somewhere between 110 and 130 holdings in your portfolio. You can see the portfolio weightings on the right-hand side. Your portfolio, which is the blue bar, the green bar would be your primary benchmark, the Russell 3000 Value Index. And as you go down, you can see consumer staples were underweight relative to the benchmark. Energy were underweight. And then you'll see financials, healthcare, and technology overweight relative to the benchmark. That blue bar is ahead of the green bar. And then you can see real estate and utilities, which are not represented in our portfolio at all. They just don't quite have the characteristics that we're looking for, underweight that portion of the market. Overall, still seeing plenty of opportunities. While the overall market, as evidenced by the S&P 500, is beginning to look expensive relative to history, the value portion of the market continues to look attractively valued, and we're not having any problem trying to find additional ideas for your portfolio. So still think very good opportunities in the value portion of the market today in the U.S. Page 19 shows you your.
Quick question,
Yeah,
just
sure.
since you were talking about the market caps and overweight mid, are you starting to see, as you're putting money to work, opportunity in smaller companies now too? I mean, it looks like it kind of was trending down, but do you anticipate
Yeah, I'd say
from a
small and
forward-looking-
mid-cap. So when you look at the capitalization, small for us is probably $2 billion and above of market
Okay.
cap. So between $2 billion and $50 billion in market cap, those look like some of the best opportunities that we're seeing.
Okay,
Companies like the mega cap companies where they're trading at trillion-dollar valuations, you're not seeing as many opportunities there for us.
right, so then this
portfolio.
small, the gray bar, the gray line.
Yes.
On page 17, is that representing, that's the Russell 2000?
Yeah, basically the Russell 2000.
So you're going to have some smaller,
Yes.
so
And
that might be, if you're targeting 2, then you might naturally just be underweight those
yes.
often.
And
Okay.
what's happened recently is one of the reasons why that line has gone down is because the capitalizations of those small cap stocks have gone higher.
Mm-hmm.
So because they've gone higher, the same holding would be now classified as a mid cap
Mid,
stock
yeah.
instead of a small cap stock because it's been a
Growth.
successful investment.
Yeah,
Okay.
thanks.
Page 19 shows all your holdings, and it's color-coded by recent transactions. So a new addition would be a green diamond. You can see in the financial sector, LPL Financial was added to the portfolio. An orange circle, Aflac was removed from the portfolio as it reached our price target. And then an up arrow would be adding to an existing position, and a down arrow would be trimming an existing position in the portfolio. Just to give you an idea of the portfolio. The turnover of the portfolio has been relatively low here the last couple of years. This page here represents 4% turnover for the portfolio. Over the last year, we've turned over your portfolio about 20%. And it's typically been 20 to 40% per year, depending upon the opportunity set. So on average, we hold a position in your portfolio for 2.5 to 4 years, depending upon the year of turnover. On page 20, you can see the original investment of $30 million, which was if you took the police initial investment and the initial investment from the town and you allocated it towards the equity allocation that we gave at that time point period, it added up to about $30 million. So that's why we're showing that to you on the page. So in 2005, we invested about $30 million for you, and that has now grown to $210 million. And if you had invested in the Russell 3000 Value Index with no fees, you'd have about $140 million. So we created if you had kept all the money there like the town has actually, the police haven't, but if you kept the money there the whole time, we would have made you about $70 million over the index, over that time period. Is that clear? It's kind of, okay. There's a little theoretical there, but you get the idea of the opportunity that we've created for you. On page 21, you can see the long-term performance. Now, this goes back to our history. You started investing with us about 10 years after we started the firm in 2005. We started the firm back in 1995. So this data goes back to 1995, but you can see in down markets, this portfolio has outperformed about 68% of the time, so we've done a pretty good job of protecting capital in poor markets. In up markets, we've outperformed about 50% of the time for an overall, it's called batting average of 56%. Now, if you were I don't know, an NBA free throw shooter and you shot 56%, that wouldn't be too good, but if you were shooting three-pointers at 56%, you'd be Steph Curry. So how does that stack up compared to the competition? On page 22, you can see all the all-cap value managers that have been in existence since 1995, and we rank 6th in return at that nearly 12% return per annum on a net of fee basis. Our information ratio or risk-adjusted returns puts us in the first percentile. That's because we take less risk than most managers out there because we have a more diversified approach. And then finally, that batting average I showed you earlier puts us in the first percentile of all cap value managers during that time period. So, for us, we try to keep this investing business pretty simple. We try to create excess returns for our clients on a consistent basis, and we think we've stacked up pretty well relative to the competition, and we certainly have appreciated your business for the last 19 and a half years now. We're almost up to 20 years now. Any questions on the portfolio or?
have any percentage limit on how much you invest in one stock?
So it would be no more than 5% in a single stock. And today, the biggest position is 2.5%. It's rare to have a position bigger than 3.5%, 4% in this portfolio. We like that diversification, because things can happen that you don't expect, and we don't want one or two stocks. You have 113 stocks in a portfolio, and if 2 turn out to be bad, they could ruin your performance for the year. So we like to spread out the investments.
I'm accustomed to that from a personal standpoint.
Yeah, okay. I think we've all experienced it ourselves along the way, huh? On occasion.
Great.
Anything else?
Anyone have any questions? No?
Okay, thank you very much,
Thank you.
appreciate it.
Likewise, thank you for the almost 20-year partnership
Yes.
there.
The next time,
Yeah.
well, hopefully the next time we see you, we'll be there for 20 years, so.
Yes, yes.
think it should be.
We will be,
Say hi to Ed Oder.
Oh, well, yeah.
Oh, yes.
I interviewed him for Annapolis when he was applying to college.
Ah,
So that's many years, probably
That's-
20 years ago.
oh, that's interesting. Okay, we'll
Yeah, we'll
say
be
hello
sure
to
to make
Ed.
that connection. Very good. Do you have dates for the meetings next year? I know Mike
I was
mentioned.
just
yeah,
about to
January
say that
7th.
we are voting on our dates today. So
Oh, perfect.
after this meeting, we can get back to you with the calendar for next year.
Awesome. We always like getting them marked up early, so we make sure
Yes.
we got no conflicts.
Great,
Great. Well, thank you all so much.
thank you.
We'll,
Great to see you
Great to
both.
see you again.
See you as well. We'll let you know if we stop off in New Haven on the way.
Yeah.
Real pizza tasting.
That's right.
Thanks, John. Thanks a lot.
Thank you all. Have a nice evening.
Thank you, you
Thanks.
too.
See ya.
And yeah, talk to you soon.
Okay.
All right. Great. All right, so moving along, we have the invoices and expenditures, which are merely for just review unless anybody has any questions. Fees? No? Okay. So next up on the agenda, we have the retirement and refund applications. I know Tony has reviewed them and doesn't have any comments. Does anybody else have any comments on the town or the police? We have activity this quarter for the police as well. Okay, well then I think that brings us to approve. Do I have a motion to approve for the town?
Make that motion.
Okay, do we have a second? Paul, all in favor for the town? And then for the police, do we have a motion for the police? And a second? Paul, okay, all right, sorry, my
No,
head is facing the
it's
other way. Okay. All right, so now on the calendar, so we have the dates here. As per usual, we always have a snow date in January. One of the things we want to discuss is just given the attendance and ability to build a quorum each and every quarter, we moved to a hybrid this year with 2 meetings being virtual and 2 meetings being in person. I think with people's moving schedules, the in-person has proven a little bit challenging for getting quorums. So Paul, appreciate you straddling both sides to be able to bring us together today. So wanted to get feedback on whether anyone had a thought around if we were to move to all 4 meetings next year being virtual and going via Zoom
Kevin
or
just
Teams.
brought that up.
Pardon?
Kevin and we were just talking about that before you came in.
100% for it.
Okay.
Yeah,
Yeah.
no issues.
Okay, great. So then actually, if we could make an amendment to this to note that everything for next year, for 2025,
Yep.
will be virtual. Is everybody okay with these dates? I know they're far out in advance, so generally, there's usually not a conflict. It follows our usual schedule.
Should.
Okay, great. So can I get a vote to approve the calendar for 2025?
Make that motion.
Okay, great. Oh, we've got both for all in favor. Okay, unanimous. All So that brings us to our last item here, which are the minutes. Did anybody have any comments on the draft minutes from our meeting in July? It's a relatively short one. No comments? Okay, do I have a motion to approve for the town? Paul, the second for the town. Fred, all in favor for the town? And do I have a motion for the police to approve? And Paul, second.
He always beats me.
He, I know, it's quick. All right, unanimous on the police. So that brings us to the end of our official agenda here. I believe it just leaves us with a motion to adjourn unless there were any other issues that anyone had to raise. No, I don't believe so. Okay, so do we have a motion to adjourn? See that?
There you go.
So fast.
Trying to be casual.
The least
He's too
controversial.
quick for me.
All right, all in favor to adjourn? There we are.
Thank you.
Thank you.